Hello everyone and welcome to the Money Maker Machine channel. We are in the middle of the earnings season and you will see a lot of great news. This Wednesday, October 29, we have got some huge names dropping their numbers, and I have been scored the web to find the 6 companies where the news screams buy or sell after their reports. I will break down what they do, the latest buzz, and my take on whether their stock heading up or down. This is your cheat sheet to stay ahead of the game. If you are new, hit the subscribe button and the bell for daily market hit. Let's roll, no fluff, just the good stuff. So let's start up with the first company, that is Microsoft, the $3.8 trillion tech titan. They are behind Windows, Office, Xbox and the Azure cloud platform, plus AI tools like Copilot that businesses love. The scoop: Azure is killing, almost 30% revenue growth in Q3 per Yahoo Finance, driven by AI workloads. They just bumped their dividend 10% to 91 cents, and analysts like JP Morgan see Q1 from 2026 revenue hitting $77 billion, above the $75 billion street guess. No major red flags. They are pouring cash into AI data centers. Consensus EPS is $3.65, up from $3.30 last year. My take is that they are set to crush estimates with Azure momentum. Stock could jump 5 to 7% after hours. If you are in tech, Microsoft is a no-brainer hold. Now, the next company from the list is Alphabet, ticker GOOG, the $3 trillion company Google parent. Think search, YouTube, Android and Google Cloud, cashing in on ads and subscription. Hot news is that a new Anthropic AI partnership is boosting cloud revenue over 30% per CNBC. Ads are rebounding, with AI-driven Gemini now reaching 1.5 billion users monthly, up 60% since October. BofA upped their price target to $280, and analysts see $100 billion in annual cloud revenue by 2027. The capex is high, but it's fueling growth. EPS forecast is $2.25, beating last year $2.12. My opinion, they are teed up for a big beat. Shares might climb for maybe 6%. At 24 forward earnings, Google is still among big tech. Now, the Meta platform, ticker Meta, the $1.8 trillion social media giant running Facebook, Instagram, WhatsApp and Threads. Ads are their core, with AI and metaverse bets on the side. Latest headlines are that Q2 was a banger, revenue up 21% to $47 billion, EPS at $7.14 per ZEX. Threads hit 350 million users and AI-driven ad clicks. Q3 revenue guidance is between $47 and $50 billion, topping estimates. Reality Labs losing are shrinking down to $4 billion. Expecting EPS is $6.60 from $6.03 last year. My view is that with the ad growth and AI kicking, they will smash expectations. Stock could rally 6 maybe to 8%. Meta is undervalued at just 24x earnings, and I'm bullish on this company, to be honest. What's your opinion? The next company from the list is Boeing, the $164 billion aerospace player. They make 737 MAX jets, defense gear and satellites for airlines and governments. The good vibes are that FAA just okay boosting 737 MAX production to 42 planes monthly per routers. Q2 deliveries hit 150, lifting revenue 35% to $22 billion, and a $2.8 billion contract sealed the deal. The CEO cost control are working. Services earnings should hit $900 million. The consensus EPS is $2.46 loss, way better than the last year when it was minus $10.44. My read is that the delivery progress sparks a relief rally. The stock could pop 5% or maybe even more. The turnaround is real. I will grab shares or any dip for this company. Other company that is reporting the sales is Starbucks, ticker SBUX, the $97 billion coffee king with 38,000 stores slinging drinks and snacks globally. Troubles it's ahead. The Q3 sales fell 2% with US traffic down 4% per seeking alpha. They ditch full year guidance after missing Q3 EPS at 50 cents versus 65 cents expected. The tariff could spike costs for coffee with 10 maybe 15%, and China's recovery is flat. The new CEO it's announcing $1 billion restructuring, closing stores, cutting 900 jobs, and it's just the beginning. EPS forecast is 56 cents, down from 80 cents last year. My opinion is that the weak traffic and cost hikes means a likely miss. Stock could maybe tank and drop maybe 5 to 10%. The dividend is safe, but I will hold off and consider maybe a short. Now, the next from the list is Carvana, ticker CVNA, the $73 billion online used car disruptor with a no-haggle delivery model. They are on fire. Q2 revenue soared 42% to $4.84 billion. Units sold up 41% to 143,000 cars, netting value as around $300 million profit per market watch. Full year EBITDA guidance is between $2 billion and $2.2 billion, and analysts are all in. 11 buys, median targets is around $430. The used car market rebounding and they are now profitable. The EPS that is estimated is $1.33, up from 64 cents last year. My take is that strong sales and margin means they blown past estimates and the stock could jump 7 maybe to 10%. They also turn around in a very good way, and this is a rocket. And the last one more powerhouse to add to the winner is ServiceNow, ticker now, the $195 billion SaaS leader. They build cloud platform that automate IT, HR, and customer service workflow for big enterprises, supercharged by AI to make ops smoother and faster. The buzz is electric. Q2 RPO backlog soared 24% to $10 billion, with subscription revenue guidance for Q3 at $3.26 billion, up 20% year over year per their earnings call. They are dropping AI innovation like workflow data fabric, landing 89 deals over $1 million, including 11 mega ones past $5 million. Analysts like Derrit Wood are calling a solid beat, with full year EPS jumping 29% to $9.32, fueled by federal bookings and AI adoptions. The consensus EPS is $2.33, up from $2.15 last year. My take is that this AI momentum means they crush estimates. The stock could rocket maybe again 6, maybe 10%. Now it's a growth beast, and it's very important. And now we are at the final part of this episode, and here is the rundown for October 29. My top bets to soar are Microsoft, Alphabet, Meta, Boeing, Carvana, and even ServiceNow, each riding killer news like AI growth and big deals, setting up beats with 5 to 10% stock pops. Starbucks also, it's a hard pass. Weak sales and cost hikes could sink it maybe 5 to 10%. Always dig into your own research. Markets turn quick. Which stock is your favorite play and which one is the one that you invest in? Drop it in the comments, hit a like if it's a sparkle idea, and subscribe also for more videos and more ideas like this one. And of course, thank you for watching, and see you in the next episode. Bye.